Good day, Money Masters and Treasure Hunters. Welcome to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom for one more hour before he returns from vacation next Monday, folks. And for those of you not familiar with me, I kick things off for TFNN every day at 9 o'clock. So if you're looking to understand where the markets are going, you can listen to all the other stations, CNBC, what have you. They'll tell you where the markets are at. I'll tell you where they're going. You can turn into TFNN. You can do it either by your mobile device by just simply going to www.tfnn.mobi. You can watch us on Tiger TV. You can actually do that on your iPhone, your iPad, your Google device. And go over to the homepage of TFNN.com. On the right-hand side, you'll see a little area that's got some little red dots around it. You can bookmark that on your device so that we're just simply one click away. Then following the 9 o'clock show, Tom and I do a show from 10 to 11 every day of the week called the Money Masters Show. Now, the Trader's Edge show, that's the one I do from 9 to 10. That is archived on Channel 9. So if you're looking to want to educate yourself, go to the archives on Channel 9. You can also catch the archives of the Money Masters Show on Channel 10 at Tiger TV, folks. So happy July 5th. Hopefully everybody had just simply an outstanding July 4th holiday. Obviously a little bit of a vacation time. So for those of you that are on vacation, thanks for tuning in. Hopefully you're having a great vacation. And if you're just getting off work, thanks for tuning in as well. Now, folks, I treasure your presence here today. Absolutely treasure it. And my outcome is to help you to become a better money master. Now, even to do that, I did 2 special taped hours for our July 4th edition. Those are actually archived on Channel 5 under recommended viewing. So if you haven't had a chance to go, watch that, or you didn't catch us live yesterday because maybe you were barbecuing some chicken or ribs or steak or, just simply enjoying the family and friends, go to the homepage of TFNN.com under Tiger TV, click on Channel 5, recommended viewing. There's 2 hours of excellent education there that you should absolutely check out. Because you know what, folks, it's all about being able to lead an inspired life. That, in my opinion, is what it's really all about. So let's go take a look at one of our tools, folks. I call this the tool of courage. Now, doing what it takes, folks, doing what it takes to achieve personal success, it's more than an exercise in discipline. It's also an exercise in courage. For some of us, just getting through the day, or let alone reaching for those stars up there, it requires what, folks? It absolutely requires courage. Now, that's why true courage is what I call the priceless commodity. We're going to talk about commodities today. We had the dollar. That's a commodity this day. You had the dollar index up over $1. You had gold down 18 bucks. You had silver off 62 cents. We're going to talk about commodities, but the priceless commodity, folks, that's the courage that is within yourself. Now, take a look at the Greek philosopher Aristotle. He said it best more than 2,000 years ago. He said this: a truly courageous person is not someone who never feels fear. Think about it. A truly courageous person, it's not someone who never feels fear, but who fears doing the right thing, folks, and at the right time and in the right way. In 1933, at his inaugural address, FDR said it, there is nothing to fear but fear itself, folks. So, folks, don't live in fear. As Tom likes to say, live in love. I'll tell you, live in courage as well. The courage to live up to your ideals, nobody else's, your ideals, and the courage to take advantage of all the opportunities that are within your reach, folks. And they are right in front of you. Just turn your mirrors into windows. That's all you got to do. Our call-in number is 877-927-6648. Give me a call, folks, and we can overcome that fear of just simply calling into the show. Now, let's go look at the fear and courage in today's markets. One of the emails, I got several emails today, as I do each and every day. You're welcome to send me an email, steve@tfnn.com. And the most common question was, Steve, how can the markets only be down slightly, like the Dow finished down 47 points, and the U.S. dollar index be up over $1? And the reason is, folks, is that the correlation between King Dollar, between the U.S. dollar index and our U.S. markets, it is only a directional indicator. If you're watching on Tiger TV, I happen to have the S&P futures contract up on the screen. It's a 5-minute chart that I've got up there. That way, it's always showing lots of activity here in a very quick period of time. And the red line that you're looking at on Tiger TV, if you're watching along with us, that's the ES Mini. That's the ES Mini. Right now, it's trading out at 1360.25. The blue line is the U.S. dollar index inverted. That means if the dollar is getting stronger, the line is actually going down. That way, you can follow the blue line with the red line here, the U.S. dollar index, along with the ES mini. And you can see the correlation has been there all day. It was there all morning. It was there all afternoon. It'll be there. The problem is you can't correlate a specific number of ticks or pennies or whatever with regard to the U.S. dollar index and the exact number of either Dow points or S&P points or Russell 2000 points that the index should be up or down because of the dollar. It is a correlation, directional correlation, period. Now, we had the Dow finish down 47 points, S&P's off 6, composite down really flat, down 39 cents, so not even worth mentioning. You had the Russell 2000 off 1 point. You had the New York Stock Exchange down 63 points. The NDX 100, that was up 1 point. As I mentioned, the dollar index up a buck. About $1.07, trading out at 82.95. You've got gold trading out at 16.03. Being down a little over 1% off $18. You have silver down 2 2/10% off 63 cents, trading out at 27.65. Light sweet crude pulling back. And just slightly, folks, pulling back 78 cents as we take a quick look around the world, mixed around the world. You had the DAX down 29 points. We're going to talk about the real relevance of that because that is very important. It's going to be important to take a look at the DAX tomorrow when it starts trading, or you can get up at, it's about 4 o'clock in the morning. You can see how the DAX is trading. You had the FTSE up 8 points. You had the Nikkei off 24 points. The Hang Seng was up 100 points, and the Shanghai off 27 points. So let's go take a look at really the leader out here. Normally, Tom likes to start off with the S&P or the Dow. We're going to start off with the Russell 2000 because what we want to take a look at is what has been the weak hands out there, because the weak hands have proven to be the strong hands now. And what I'm talking about is coming off of the June 4th lows. What the Russell 2000 did today, they closed at 817.43. But more important than that, folks, is they continued to close inside the May 1st high. Not only did they do that, they completed an A to B equals CD. That A point on the Russell 2000 started down on June 4th, the low of 729.75. That was your A point. The B point was made on June 19th when it got up to 789.51. Does a normal pullback, pulls back into the price point of 758.10. If we take a look at that pullback, what we're going to see here is that happens to, well, I was going to try to grab the tool. I can tell you what that's going to be. That is going to be a point probably about a 50% retracement, so not all the way down to the 0.618. That tells you that you're more likely going to do more than a 1-to-1 A to B equals CD. That was the first clue that it gave you. When you take a look at the C to D leg, and folks, what I do is I teach people how to become a master at that C to D leg. You see, the market, I let the market do 75% of the work for me. That's what I truly call leveraging. And when I say that, we just let the market find the A point, the B point, and the C point. Once that's done, then all I need to do, all I want to be able to teach you to do is simply how to master that D point. And what you can see here along the C to D leg, if you're watching on Tiger TV, you're going to see that the price right now is stronger on that C to D leg than it was on that A to B. Now, when we talk about A to B equals CD, folks, we're talking about a measured move. We're talking about if you measure from point A to point B, then after the market makes that retracement to point C, all you have to do is add that dollar difference. But you see, the markets they don't always do a 1-to-1, A to B equals CD. In fact, you know how often they do it, right? How often do they do an A to B equals C to D, a measured move? That's right, 60% of the time. The other 40% of the time, folks, are doing something more. They're doing something greater. A 1-to-1.272, a 1-to-1.618, one of your Fibonacci expansion numbers out here. Well, here's the key, folks. The Russell 2000 closed inside the May highs again. They tested, and we're talking May 2012. They tested the low of that. They closed back inside it. They closed inside it on Tuesday. The Russell 2000 wants to take out the May highs. The Russell 2000 on its way to 834.04. And then, folks, its next target, March 27, 2012. Don't ask me how. I don't know how electricity works, but I know that it does. And so do these A to B equals CD patterns. Our call number 877-927-6648. Dow off 47 points. S&P off 6. Composite totally flat. We'll be right back, folks.